So, hello. Hope everybody's having a great day wherever you are, whatever you may be doing. 50 pips in the house, so no trade calls or recommendations or responsible for own stuff. We're here for educational purpose only for another one of these Substack videos. So, just a little bit of a quick update on TLT. So, we've been talking about bonds a lot recently, also mentioning it on my Twitter feed. Some people were asking, can you go through the chart? Well, basically, here, our base case is, especially in this market context, is that, any kind of strength in equities, which is met with continuing weakness in bonds, aggressive weakness in bonds, especially in the long end, it has to be taken with a pinch of salt, right? And you have to be careful pressing the long side because especially also where we're heading here into the seasonals, it's a window where we should see some kind of downside in equities, not back end of July. And also, if you look at the whole July into September, October period. Now, as far as bonds are concerned here, TLT, our base case has always been that we have to come back and retest these lows. Now, you can look at this in a lot of different ways. You can slap a moving average on this, the 200. You can see that we're, still holding heavy. You can look at the shorter term action, but, the reality is that every rip still gets sold. And right now, on this break where we've had a little bit of an attempt to pop high where this channel broke down, usually, right? Let's get rid of this just to make it a little bit easier. When you tend to see these very tight coils in one direction and the trend line breaks, especially like here, if you get the break below and then the pop above, which is strong to fill the gap, gets sold straight away, usually it's fairly good bet that you're going to see unwind back into the scene of the crime. That's why I was posting this with the magnet, right? Because that's going to be the magnet to the downside. Now, the issue here is that we're dangerously close to these lows, right? And we know what happened last time on equities when we saw yields climbing, right? So you can look at the 10-year if you want. Here, dangerously close to this 4.5. I think really, unless you're above 475, it's not really focused. But what we're talking about here in terms of the long end, I'd be far more focused on the 30-year, right? You can see we're holding above 5%, and this is another one. You can look at it here too. These it's the same chart, right? Just flipped over, but these patterns, right? And sometimes people prefer looking at stuff to the long side. It's just easier for them to see. But usually, right, these patterns end up breaking higher, right? So going back to TLT, here, what a lot of people were saying, what are the targets to the downside? Well, the targets to the downside in this kind of situation are very tricky, right? Because, you do have a little bit of a roadmap back into these lows, but once you take out the lows, you're in an uncharted territory, right? It's kind of like in technical analysis, it's always easy to look left to try and find some kind of reference point. But here you really have no reference point. So a lot of people, people have different ways of looking at it, whether they're looking at projections, whether they're looking at fib extensions. I find it particularly hard, especially when in this context, because it depends how it happens and what it happens, what makes the break happen if indeed it goes. So it's really, really hard to have targets. If I were forced to look at something, right, I would avoid looking at projections from this high, because one of the things where people would be tempted is looking at this whole move down, right? So basically, let's frame this. So A to B, you see this just got sold very hard. This is probably a 20 retracement. And right here, if you're looking at 123 extension there, we're talking about 71, 7140, 7150. So that would be a first target to the downside. And then you'd be looking at 50s, 40s. Again, wouldn't have that in my bingo card yet, but that's what, that's probably what most people are going to be looking at. That makes a little bit more sense to me than looking at this move. So this is the way I would do it if you're looking at a real bigger picture. I would prefer to look at something like, even though it's not pure because it's not a new swing low, I'd like to look at this to give shorter term targets to have something which is a little bit easier to read. And I'd be looking at, again, break below this low to see this move all the way back into these 77, 75s. But again, all the targets are pointing to, mid 70s. So whether you look at this or whether you're holding that initial one using this October 22 low and then trying to frame this with, let's go all the way back up, what is essentially that March 20 high. The one I highlighted was mid 70s, and here you're looking at 71. So those are the targets which I would be looking at. But again, I think here, more than looking at it technically, is just something that if you're actively trading here, especially if you're trying to trade the long side on equities, you have to be very, very careful here, right? Again, especially as long as the bonds are heavy. Keep in mind, we're going into that seasonal period, which is a little bit trickier. Summer can be volatile. We still have an awful lot of event risk going into 1st of August, probably end up being pushed back to 1st of September for all we know. But I think, again, here the focus is really the bonds, the long end. That's what you have to keep. That's what you want to keep in mind. And again, things could get very, very whippy unless we break outside of that. And there's a case to be made that there's just so much uncertainty that, broadly speaking, we're still going to stay in a broader range, right? And you can call that broader range, 91 into these previous lows. But with the way the headlines are moving, with all the trial balloons Trump and Washington are throwing out, there's just, it's, you get to a point where people just don't trust anything. And, you can only push things. You can only push trial balloons. You can only push taco trades so far before people just take chips off the table and you get a little bit of a flush. And keep in mind, liquidity is being shockingly low. Generally, also, when we had heightened volatility, you've seen a lot of, liquidity being pulled out of the market. So you have to be very, very careful with overnight risk, especially going forward in these next summer months. So I still believe that the focus is ideally on intraday trading, focusing on shorter moves. You have to be comfortable going long or short, irrespective of what your feelings are, depending on how the market sets up. But in terms of carrying overnight risk or carrying risk over the weekends, I'd be extremely careful holding long risk. So again, that's pretty much the way I'm looking at TLT. I don't think there's that much more to say. Just answering some questions that came in. Okay. Wishing everybody all the best. Take care. Bye-bye.